Okay. Well, and since you guys are here, you found the Zoom meeting. Obviously, I don't need to go over that. The textbook, the ebook it's in Blackboard. Oops, not that. You may want to check and make sure it works. This is the link that they gave me. Hopefully, it works. This is part of the bundle, Laker bundle. So it should be working. If it doesn't, let me know, and I'll see. But then, just so you know, we've had problems with our textbook this semester, so there could be problems with them. Okay, you can read through all this, blah blah blah. Zoom meeting, you know what those are. Okay, course requirements. So the assignments that we do, there's kind of two different categories. We have assignments, textbook problems, those sort of things, and those are worth 20% of your grade. The exams are worth 80% of your grade. And let me show you where we put those. Nope. Nope. Here we go. All assignments and exams. Okay, so all the assignments and exams will be here. And when you turn something in, you'll go here. Here's where here's the handouts. A little bigger. So here's the handouts, and you say, okay, I'm ready to turn it in, and blah, 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 blah. Okay, so you probably upload files, and you can upload it into there. Okay. Now, in here, you'll see this. Let me click on it. Oh, here. And this kind of tells us how to put the assignments in. And let's go down here to the submittals. You can submit you can submit the work almost any way you want. If you want to print out the handouts, or excuse me, if you want to enter it right into the handouts, you can just save it in the file and then submit that. Don't worry about whether your name's on it or not. It's going to go into your thing to, your part of Blackboard. But anyway, so you can do it right into the document itself. I'll do that just because it's easy for people to read than my writing. You can also, if you want to print it out and write in the answers, that's fine too. If you want to just write the answers on a notebook paper, that's fine too. And you can either scan those or take pictures. So if there's a 10-page handout, you just take 10 pictures and you can submit it that way. And for all the stuff in the, I'll show you. For all of the stuff in, well, I'll show you let me get out of the way. Pop-ups. Here it is. And you'll see that there's unlimited submittals. You can put in 50 documents if you want, and the highest grade is taken out of those. But so all the assignments will have unlimited submittals, so you can submit 10 pictures. There's nothing wrong with doing that. And if you want to just take pictures of your notebook, whatever, that's fine too. Have the numbering by, this is problem 4 or 5, whatever. Now, this is kind of important. The type of files that are not allowed. It does, for whatever reason, Blackboard does not like zip files, which are Windows-based files, and doesn't like page files, which are the Apple-based ones. So, while it's a lot of times more convenient to, have them all into one. You have 10 pictures. You say, okay, I'm going to put that into a zip file, or I'm going to put that into a page file. But what happens is you submit that in Blackboard, it doesn't like it. It doesn't know what to do with it. And so what happens is it ends up just being pending the whole time. I can't get out of it. But anyway, so if you do take pictures of your homework, and there's nothing wrong with that at all, homework or tests, either way, just submit them. And again, if it's 10 pictures, take 10 pictures and submit the 10 pictures. So Any questions on that? Those are my cats barking in the background. All right. So let's see here. Blah, 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 blah. Okay. So that's how you submit stuff. Any questions so far? Okay. One more thing. Well, I got a couple more things. Everything needs to be submitted in Blackboard. Do not email it to me. I mean, unless there's a problem with the Blackboard, don't email it to me. But so we want to submit it in Blackboard. And the nice thing about having it in Blackboard is you can see it, I can put notes on it, and that sort of thing. Okay. Usually assignments are due 1 week after they are assigned. Okay, so let's take a look at. You'll see the due date on here is February 2nd. That's because we're probably not going to finish it this week, but next week will be the 24th. And I usually give a week, the Friday of the following week I'll have to, so you can put it in. So if the 24th, fine, so that's how I came up with due February 2nd. Okay. Now, this is very important. I'll make it angry giant red. That's how you know it's important. Late work is accepted without penalty. So if you miss the due date, let's say it's, whatever, February 2nd comes and goes, you didn't get it in, you can still turn it in. Late work is accepted without penalty. And if you're wondering why I do that because I go by the objectives for the course. And the objectives for the course are, however many objectives there are. Actually, I'll look at it, it's in the syllabus. But anyway, those are the objectives for the course. And whether you meet those objectives on week 1 or week 16, to me, it doesn't matter all that much. But now here's the thing. The grade to date will have all of the work that's due included in it. And the reason I say that is, if you don't turn it in, whatever reason, you get busy or whatever, your grade's going to look bad until you turn it in. Once you turn it in, everything should be okay. But until you turn it in, it goes past that due date. It's going to be part of the grade to date calculation. So you may say, well, why did my grade drop down to a 64 or whatever? Well, okay, well, these couple assignments are past the due date, so turn those in, and everything will be good. So if you do go past the due date, you can still turn it in and get full credit. There's no problem. All the way up until last day of the class, you can turn anything in. However, your grade to date will only reflect those things that are turned in on the due dates, by the due dates. Any question on that? Okay. You guys are sleeping already. All right. Let's go to grading scale. You've probably seen this before. Don't worry too much about this. The week thing, this will change depending on what we do. So this first one, you see chapter 9. Let's skip that one for a second. So this is going to be our first one that we're going to go over today. And as you see, kind of go on. Now the kind of wacky one here is this, and that's the audit sampling. Audit sampling, there's 4 separate handouts for audit sampling, and we do them throughout the semester. And I used to do it on the first day, but I think I'm going to, next class we'll go into the first sampling handout. So it's done, there's 4 handouts, and then there's an exam. It's usually given around week 13, 14, something in there. It kind of varies. But anyway, we will have an exam later on for chapter 9, which is sampling. And the reason is because unlike most chapters that have 1 handout, this one has 4. So it's good. We're going to take more time to do it. And you may say, well, why don't we just do it all at once? Because it gets to be a bit much. And when we put them all together, a lot of times the different methods get confused. So it's just easier to do it, spread it out. So anyway, so sampling is going to be done. We're going to have 4 sampling handouts, and then we're going to have a sampling exam. Again, usually it's near the end of the semester. I think that's about it. You can go through these and see what we're covering if you want to take a look at those. Okay. Any questions? All right. Well, let's pull up then. Let's get started on the chapter 1 handout. And chapter 1 handout. Let me get rid of this. All right, chapter 1 handout. Okay. So basically, this whole course is sort of set up like something you'd see taking the CPA exam. And we'll talk about what that means and all that today. But it's for external auditing. So it's when you audit a company's financial statements. And the auditors come in as independent, and they'll issue a report. Now, the report, we're going to see the report in a second here. The report is the last thing in an audit. Okay, you do the complete audit, and then the last thing you do is write this report, and then a page or two, and that's it. That's what auditors do. When you pass a CPA exam, the CPA license allows you to do those audits. Nobody else can. It's a license. And so you need a license basically to write this report that gets accompanied with the financial statements. So believe it or not, the entire, the CPA exam, how big and difficult it is all focused on getting you a license so that you can actually write this report and do financial audit. So this is an audit report. It's a standardized report. Everybody has to do it this way, and we'll talk about that in a second. There's other things that go on with that. But it's only CPAs can actually do the financial audits and can write this report. Kind of like, who can drive a car? Only people that have driver's licenses. If they're driving without one, it's illegal. And the same thing. And the CPA license is just like a driver's license. Pass an exam, state issues the license. If you do something crazy, the state can take the license away, just like a auto license. Okay. All right, so let's take a look at this. So this is the standard audit report. And the AICPA makes this, and we'll talk about what they do in a little bit. And this is important. This audit report is issued with the company's financial ABC. ABC is the company. That's why I got that there. Will be issued with it. So what happens is this: company makes their financial statements. The auditors do not make the financial statements. The company does. So ABC will make their financial statements. They'll hand those statements to the auditors, and the auditors will say, okay, well, let's see how you came up with these numbers, and we'll do our testing and all that kind of stuff and come with those numbers. We don't change the financial statements. Only the client can change the financial statements, but we do have this audit report that goes along with the financial statements. So the company will, if they're getting a loan at the bank, they'll give the financial statements to the bank, and then along with that, they'll have this audit report will accompany it saying, look, this is an audit. We came in and we audited these financial statements. So this is a report that goes along with the financial statements. Auditors don't have any direct control over the financial statements, but they can write up something in the report if the financial statements are misleading, for instance. Okay, so this is the independent auditor's report. We have to be independent from the client. Okay, so can I audit my mother's company?
I was going to ask, what does independent from the client mean? It's like we shouldn't have any ties to the client, not a relative, not a friend.
Yeah, not in no investment either.
Okay,
I can't audit my own company. If I have my audit, I'm a CPA, but I have this company that sells shoes. I can't audit that. I'm not
sure.
independent. So yeah, and that's a very key thing about this is it's independent, and that's huge. And actually, the next chapter we're going over is chapter 3. Is probably the hardest chapter in the whole book. It's all about independence. So yeah, so we have to be independent. And again, and why do you think that is? Why do you think they need to be independent? I can't. If I'm a CPA and I know how to, I don't make financial statements. I know, why can't I just do the audit?
To prevent a conflict of interest or to keep people from being dishonest, I suppose.
Yeah, and it would be meaningless, right? I mean, if I hand you my financial statements, yeah, well, I checked on them and they're okay, and it would be ridiculous. So it has to be someone who's independent and exactly what you said, unbiased. That they'll give an honest opinion of what those on the financial statements. One of the things we get the financial statements is some integrity. Some people can rely on it. That there's some credibility to the financial statement. What do we give? We give credibility. We give reliability. People can rely on the financial statements. Without it, if someone just hands you financial statements and they said, "Yeah, we made these ourselves," it doesn't carry a lot of weight. But if you have this audit report that goes with it, all of a sudden it's saying these financial statements, and we'll talk about it in the audit report here, they're not perfect usually or sometimes, but you can rely on them. And so that's what this audit report's all about. It's all about giving, and that's what you're giving to the client. What you're giving to the client is basically the credibility and integrity, basically, of your firm, that these financial statements are, so that's what you're providing for them, and that's one of the reasons why you have to be independent. If you weren't, you wouldn't be conveying independence. Okay. Now, who do we make this fine? Who do we send these to? We send these to people who are outside of the business. The management of the company. You notice that we don't send it to the management of ABC Company. Why? The management of ABC Company, they're the ones that made it. So, you're not reassuring people inside the company. You're reassuring people who are outside the company of what these financial statements say. Okay, so what do we put in this audit report? The first thing we put in there is the opinion. This used to be the last thing we put in. Now we put it right up front because people who don't, they get the audit report and they would just rush through the end and see the opinion. So they put the opinion right up front, and it says what we've done. We've audited the financial statements of, which reminds of the balance sheets and related statements of income statement. Changes in shareholders' equity. Sometimes you'll see that listed as a statement of retained earnings. And cash flows. So those are the four statements. Then years then ended, and the related notes to the financial statements. The notes are all part of it. And the notes to the financial statements will have notes in there about how for instance, like inventory. Are you using LIFO or FIFO or average cost or depreciation? Are you using the straight line method, the production method, whatever it is? Those will go in the footnotes, and those are required to be considered generally accepted accounting. Okay, now here is the opinion. In our opinion, let's stop right there. Is this a statement of fact? Are we saying that this is, are we saying that this is a statement of fact? It's not. It's an opinion. Okay, it is not a statement of fact. There is a difference. Now, an opinion could be, purely based on whatever you want to be based on. For instance, in my opinion, the best color in the world is green. That's my opinion. Someone else can have an opinion, whatever. This is an informed opinion. Okay, so it isn't like we're just, arbitrarily picking a color or whatever. But it's an informed opinion, but it is an opinion. It's in our opinion, okay? And that means that there's some judgment there. So in our opinion, the company financial statements present fairly. Very important words here. In all material respects. Okay, material respects. So we're talking about only things that are material. Now, it really depends on a few things. So for instance, let's say that I'm doing an audit and I find a $5,000 error. Is that material?
Would material be, would the basis or I guess the scope be defined prior to? So like if it's a larger company, 5,000 can be immaterial to that company. So are these terms defined prior?
In the head. It's material based on the size of a company. So a $5,000 error for a really small company, maybe it's material. If the company only made $30,000, then yeah, it's probably material. You talk about something like Walmart, that wouldn't even be material. That wouldn't be material for one store one day probably. So materiality is exactly what you said. It's based on how large a company is. Walmart, $20 million error, not material. Now when a company's making billions, you're talking about tiny percentages of a percentage of a percent. Is not going to make any difference to anyone. So big differences between the size of the company and what's material, and that's one of the things we'll actually talk a little bit about later on in the semester. So we're saying that they present fairly no material respects. Now, if it's off a little bit, that's fine. If it's not going to make a difference, a $5,000 error at Walmart isn't going to make any difference. So we never say that they're 100% accurate, but we say in all material respects. Weird nomenclature. Financial position is the same thing as a balance sheet. Oops. So financial position is a balance sheet. I don't know if you need to write this in or anything. It's just different. When you see someone say, maybe somebody says financial position is a balance sheet. Results of its operations. This is the income statement. And cash flows, it's just cash flows for the year that ended. In accordance with accounting principles, just highlight that. Okay, so here we have accounting principles. Of the United States of America. So we tell them what principles we're using. In this case, it's the accounting principles, like GAAP. And so it starts right out with the opinion. We say what we did, we've audited the financial statements, here's our opinion. The rest of this is sort of explaining it. So the opinion paragraph has the accounting principles. The basis paragraph will have the auditing standards. So whose auditing standards do we follow? So there's accounting standards and there's auditing standards. And these are what we're going to focus on in this class. The accounting stuff is your normal accounting classes. This is the wacky one. Oh, I should put in this up here. This is when you hear about GAAP, that's what this is. Generally accepted accounting principles. Oops, did something wrong. There we go. This is generally accepted auditing standards. It's called GAS. I don't know if you need to know that or not, but okay. And it talks a little bit about meeting our ethical responsibilities and all this. Okay, so let's goes into the responsibilities of management. This is probably the most important one right here. Management is responsible for the presentation and preparation and fair presentation of financial statements. So, are the auditors responsible for the financial statements? The auditors. Nope.
No.
Management's responsible. It says right here, management's responsible, and actually there's a management statement that they'll sign also that says that. So management's responsible for the financial statements, and it comes down here. They talk a little bit about internal controls. Management's also responsible for internal controls. And we'll talk about those later. But the big part is management responsible for financial statements, not the auditors. Okay. Auditor's responsibility. So this is the auditor's responsibility. And it's considerably more lengthy because we want to tell people exactly what we're doing. Okay. Important ones. We get reasonable assurance about whether the financial statements are free of material misstatement. Okay, reasonable assurance. Do we give absolute assurance on the financial statements?
No. So if the auditor does not provide absolute assurance to the financial statements, I'm looking at the question for chapter 1, number 1. If it's not absolute assurance, then what exactly? Is it credibility?
Yeah, it's generally a high level of assurance, but it's not absolute. And so it's so we give reasonable assurance, and we do the auditing of the sampling. We'll kind of see that you can do sampling to say the 90% level, 95% level, 99% level. You can do auditing, of financial statements and so forth at a pretty high level. To give pretty good assurance about whether, but it's not going to be absolute. It's a reasonable assurance. For some things, like you say, well, why don't we just test everything? You don't test everything because it would be very inefficient to do so, and sometimes impossible. Take Walmart. If you wanted to do an inventory of Walmart at year end, there's not enough auditors in the world to do that. And think about inventory. Year end stuff's going in and out of the store at year end, and all this kind of stuff. And you have to have someone in every single store and every single warehouse and all that kind of stuff. It would be impossible. So it would be impossible to give absolute assurance. But the nice thing about doing sampling is you can get really pretty confident. You don't say you can get up to the 99% level by taking a fairly small, relative to the entire size of the company. Using a fairly small sample, you can a lot of times get a very good assurance about whether the financial statements are misstated or not. 99% level means that there's a 1% chance that your sample doesn't match up with what they actually do in the company. So, yeah, it's a reasonable assurance. It's not absolute though. And we've never, and this is really important. When you take CPA exam, you never say the financial statements are accurate. You never say that they're free of misstatements. You might say that they're, reasonable assurance, but whether they're free of material misstatements. But we never say they're accurate. And you wouldn't know that. Someone working at, an employee at Walmart takes a Snicker bar and puts it in their pocket. The financial statements are off. Right? The company doesn't know the Snicker bar is missing. The financial statements. So you never have that absolute assurance, but you get a reasonable assurance. Okay. We spell it out whether it's due to fraud or error. Back in my day, we just said misstatements, and now they spell it out, fraud or error, and we'll talk about that in a second. That includes our audit report that includes our opinion. So we are responsible to give an audit report that has our opinion. And it talks about here, reassurance, reasonable assurance is a high level of assurance. Again, you can get up like 95% level, 99% level. Don't do that. But it's not absolute assurance. Okay. Let's go to the second one here. This is a very important statement. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error. Okay, so if there's fraudulent financial statements are being put out, it's more difficult to find fraud than it is a simple error. So for instance, if there's a $6 million error versus a $6 million fraud, the $6 million error is usually much easier to find. Why? I mean, it is a true statement. They're not lying.
I guess the investigating fraud would involve a lot more steps to figure it out.
Yeah, exactly. You remember when a fraud happens, there's usually people who are actively trying to cover it up, right? Mm-hmm. They're trying to make it so that you don't find it. They're trying to maybe they say, okay, we had a really bad year, and if we don't have more sales or whatever, that we're not going to get our loan and blah blah blah. So they're actively working against you to try to cover up those, what they did. An error, no one's trying to cover it up.
Right. So, I was going to say, if just from personal experience, finding an error in QuickBooks, it's pretty fast. You just kind of go over certain reports like your original ledger and you figure out what's going on. So.
Yeah, exactly. A lot of times, errors are, again, errors oftentimes will be caught. First of all, systems are there to catch them, but also you have someone working against it. And so, here's the difference. Let's say that, buy a toy and the toy goes in for, it should be $6, but I accidentally put it in at $6 million. All right. Usually someone's going to kick out. If nothing else, someone's going to get in their budget report. Where's a $6 million toy? Why do we, it's going to hit something and someone's going to, figure it out. But now the difference is, a $6 million error, someone put $6 million of inventory on the books, created fictitious documents to go along with it. The documentations are all put in the system as if they're legitimate. It's much more difficult to figure that out, than it is, gee, someone just made a mistake. because no one's actually trying to cover up the mistake they're trying to, whereas a fraud they are. This is a fraud is an act of deception by whoever the company is. So it is more difficult. Okay. Let's go to here. Auditing is all professional judgment, and we also have professional skepticism. So even though you generally trust your clients, you wouldn't take them on if you didn't. You are also skeptical about whatever they hand you. So if they hand you something, you're always asking yourself, is this legitimate? Is this, how can I corroborate what they just said? Now, professional judgment, all auditing is judgment. And that makes it difficult. It makes it difficult to know exactly what to do. It makes it difficult to know what the decision is, because there's a large part of it is professional judgment. And even if you audit to a certain level, you say, well, okay, I'm going to take professional judgment out of it. I'm going to audit to, say, the 95% level. I'm going to do all my tests at the 95% level. Well, how'd you come with 95%? That's a judgment. Why aren't you doing 90%, or why aren't you doing 99%, or whatever? Everything in auditing is a judgment, and you really can't get around that. And that's why it's difficult. It's difficult to learn to know what to do for something that is based on judgment. Okay. I'm gonna skip through some of this stuff. One of the things that is fairly new, and the reason I bring this up is if you're taking the CPA exam, I can almost guarantee you they're going to test you on this, and that is key audit matters. And that is, sometimes when you're doing an audit, there are things that there's a lot of times there's things that are questionable. You're not 100% sure. If somebody's making, for instance, let's say electric vehicles, they have all this research and development of these electric vehicles. Well, how long is that development going to last for? Right? I mean, if you have some new battery technology, well, people are inventing battery technology over and over again. So even though you may have a patent that lasts for 20 years, how long is it really going to last for? So you run into these kind of vague areas that are a little bit more difficult to quantify. And so sometimes stuff like that gets put in the audit and say, by the way, we're assuming that these patents for the electric vehicles are going to be 8 years. They might be 8 months. We don't know. So the key audit matters are, and you might be talking about billions and billions of dollars here. So key audit matters are things that you might put in the report, just to let people know, like, look, it's not as cut as dry as you might think. Okay. Now I'm going to tell you two contradicting things that for this class. First thing is, this audit, that standard audit report, when you pass the CPA exam and you do your audit, you are required to use that standard report. All the reports are pretty much the same. Now, they have different companies and different dollar amounts and all that, but the audit report itself, all the verbiage in there has to be exactly the same. It's boilerplate. It has to be plagiarized. If you don't plagiarize that report, you could lose your license. I'll just make my own audit report. You can't do it. You have to use that AICPA report. All the states require that you use that report. So again, you could get your license pulled for not using that report. Now we're going to get to the ugly part about this class, and this is something that is new, and I didn't put it in the handout, but I put it in mine, and that is artificial intelligence. A lot of stuff we do, the handouts and the exams and so forth, a lot of this stuff is You can't see what I'm doing. I'm sorry. Let's try that again. Okay, this is not in your handout. This is in mine. I should probably put it in yours. Maybe in the future I will. But artificial intelligence, ChatGPT and OpenAI. Just to let you know, those, while they call it intelligence, what these really are basically plagiarism machines. And I tell you this, I just because we've had a problem with this in the past in this class. I don't get it in the regular accounting classes. We don't get it. You say make the income statement. People just make the income statement. But in this class, sometimes you get people putting it in there, and the problem with it is a couple things. Because it's a plagiarism machine, a lot of times when people put in an artificial intelligent answer, it gets kicked out as being plagiarized. Now, people who make those programs, they try to mix up the words so that it doesn't appear that it's plagiarized, but the detection of those is it can definitely be detected. And plagiarism, also just even just rearranging the words does not mean it's not plagiarized. It happens all the time, and you put it in quotes even if the words are rearranged, you put it in quotes and cite it. You're supposed to cite it. And there's another problem with using artificial intelligence. It doesn't cite where I got it from. All right. So, having said that, also in this class, most of the stuff that I give you is going to be decision based. And while they call it artificial intelligence, it can't make decisions. They claim it can, but generally it's based all on historical stuff, and it generally cannot make a decision. On my exam, so if I say, okay, here's something that's material, it is not pervasive in the financial state, whatever it is, what's the decision? Oftentimes I'll get, if they're using AI, I'll get 5 paragraphs of something that is not related. They'll say the auditor should determine whether it's it's material or not, and how it affects the the question already told you it is material. Go on from there and make a decision on it, and so they generally don't get the decisions. Now, even bigger than that, another thing is a lot of times the exams are based on the handouts. So instead of putting it into Chat GTP or whatever it's called, go to number 5 in the handout, and there's your answer. But there's also this problem though of the plagiarism, and basically these are plagiarism machines. They rearrange the words to try to not make them appear to be plagiarized, but basically that's what they are. And while we're required for our audit report to plagiarize, as far as putting answers in the for the exams and on the handouts, it's a no-no. So plagiarism is a big problem with it. Now, here's the real dangerous thing, and this is not just for this class, this is for all your classes. If you put in a paper done, you submit something that's done, and by the way, usually it's over the top. It's very easy to see if it's done by, a supposed artificial intelligence, because usually it's something that could be answered in 2 sentences, and you get 6 paragraphs. So anyway, if you submit something and it pops out that it's 82% plagiarized, you can have that taken up with the school, and basically you have to kind of come up with how how this is 82% plagiarized, and you'll be basically looking at a academic dishonesty. Now, you say, okay, big deal. Academic dishonesty doesn't sound very serious. If your school finds that you're involved in it, it may be entered on your transcript. And it may negatively impact your life. Now, look at me. I've actually told you who. That's Kate Altman Law. That's who I got this from. But yeah, it shows up on your transcript. So academic dishonesty, a lot of times, if there's a failed, I am so sorry about that. Let me turn that. So it shows up on your. So if you were, you turn in this thing, academic dishonesty, you flunked a class. By the grade, a lot of times they'll have listed academic dishonesty. You say, okay, well, big deal, right? I mean, I take the class again, I'll get, go on. The problem is two things. First of all, it's on your transcripts. A lot of times other schools will not take you. So for instance, you're getting your bachelor's here, you want to get your master's degree at UIC or whatever. UIC sees that on your transcripts and they say no. They don't take anyone who's been involved in academic dishonesty. Companies will oftentimes not take, if it's on their transcripts, will not take them. So you go through the interview, they ask for your official transcripts, you send me those your transcripts, and then you get notified a couple of days later that they're rescinding their offer. Now, what's the solution to this? Just don't do it. It's just, it's really just not worth it, And the thing is, once it's done, it follows you. You say, well, I won't tell people I went to Roosevelt, or whatever school I'm going to. They can look up and see what schools you went to, and they'll say, we need your transcripts. You're just not sending us all your transcripts. So it is an important thing not to get caught in that, and it can change people. It can change people's lives. Now, even worse than putting academic dishonesty is being put on social probation. Let me talk about academic probation versus social probation. They're two different things. Okay. Academic probation. This is when you have low grades. For instance, myself, my first semester at college, I think I got a 1.8. Wasn't the best. Next, I did pick it up. I think I doubled it. I think I got a 3.6 in the next semester. But anyway, I was put on academic probation. Now, academic probation just means your grades were low, and a lot of times, those will be on there, but your overall GPA. And if people look at that and they see you're on academic probation, a lot of times sometimes it look almost like a positive. Okay, they got their act together. They know how to get their act together, whatever. Now, social probation. Sometimes schools will lump plagiarism in with a social thing, as a social problem. Social probation is a death sentence on your transcript. Many companies will not hire you for that. No schools will take you. Social probation it could be simply plagiarism or cheating or something like that, but it could also be that you pulled a gun on another student and they just don't want to deal with it. So social probation, if they don't put academic dishonesty, if they put social probation, in a lot of ways that's even worse, even though it doesn't necessarily say that you're academic dishonesty. It leaves the door wide open. It could be anything. It could be simple cheating, or it could be getting in a fist fight with janitor or something, whatever it is. So the easiest thing to do is just to not do it. I mean, that's not just for this class. And also, again, in this class, a lot of times the answers on the test are 2 sentences, maybe 3 at the most. They are not, 6 paragraphs. I'm going to say one more thing about it, then I'll shut up. Another thing is, it has just the opposite impact of what you think it's going to have. A lot of times people that turn these in, they think, oh, my teacher's going to think I'm really smart, I'm one of the best students in the class. Look, I gave these 6 paragraphs on whatever. And it has just the opposite. Everybody who looks at that knows that that's, and we can go in and check through, see if Chat GTP, wrote this or whatever. But anyway, I do know that we had an instructor that went through and failed over half the class. It was an English professor at the school here that flunked over half the class because of this. So think about it. How the destruction of it is crazy. And then you think about those students; they may very well have that on their transcripts. You may have in that one class, you may have 15 people whose lives are going to be changed because of it. Just, if there's anything I can tell you is just don't do it. There isn't a situation where you're going to want to do it. Anyway, and I can tell you too that in this class, I just did on a couple of the tests looking through, and the people that kind of put stuff in that were using the Chat GTP or whatever program they were using, the test grades were much lower. Why? Because they didn't answer the question. Not because I didn't even go into, I can tell if this is plagiarized. It didn't answer the question. So if there's 15 points on that question and you didn't answer the question, it's, it's zero. You get 6 paragraphs of something that doesn't answer the question. So anyway, okay, I'll stop preaching at you guys. Okay, so let's go to happier things. You know what? Let's stop and take a break. I'm going on for about an hour here and rambling on. And we will, let's say, be back in, what's 10 minutes from now? 3:03?
Okay, thanks.
Hello. Oh, I just want one more thing on AI. It's nothing to do with academic or anything like that. One of the funny things about it, I don't know if you read in the news, that there's some very high-profile lawyers that have filed legal briefs using AI that have come back. The judge says, these cases don't exist. You're citing a bunch of cases that don't exist because these lawyers don't realize how the AI system works, in that they take the information and they change it. So instead of being, U.S. Steel versus, Johnson, it changes it. Okay, instead of U.S. Steel, it says Ford versus, whoever. It changes the date. It changes it, try to change it enough so that it doesn't look like plagiarism. Well, if you change a court, a case, you just change it into a non-existent case. So that's how AI works. It changes things around so it doesn't look like plagiarism. When you want to cite something that really does exist, it can change this. Okay. Chapter 1. So basically, if you look at our the steps of auditing steps of what we do, the first steps are getting a client, and for us, this is going to be mostly chapter 3 and chapter 6. We'll cover that. Gathering evidence. This is chapters 5, 6, and 9, which is the sampling. And then issue a, wait a minute, 16 might be in there too. And then issue an independent opinion. This is chapter 17. By the way, the book that we're using, the Whittington book, that is the same group that writes the Wiley CPA review. It's a very good book, and the stuff that's in the way it's presented in the textbook is basically the way you see it on the CPA exam. This is especially true for statistics. A lot of auditing books with statistics, they show kind of wacky. I shouldn't say wacky. They know what they're doing, but the statistics part of this book shows pretty much exactly how you see it on the CPA exam. Okay. Demand for audits, IBM financial statements, and the audit report. Okay. So IBM issues their financial statements. A CPA firm, audit report, okay. So IBM will issue their financial statements. A CPA firm issues an audit report that includes an opinion on the financial statements. Okay, so what do we actually provide for IBM? What do we provide for their financial statements?
Credibility.
Yep. Yeah, all we give them is credibility that they can rely on these financial statements, that they are free of material misstatement. Reasonable assurance about whether they're free of material misstatement. Okay, so let's go into business risks. All of auditing is trying to figure out what the risks are and then try to mitigate those risks. You know, some risks are bigger than others. I'll give you an example. Companies will often have something called petty cash. Petty cash is when, you know, instead of going through all the process of ordering and, you know, let's say you just need postage stamps, you know, instead of going through all of the paperwork, they just have use petty cash. Petty cash, you go to petty cash, they give you $10, you get the postage stamps for whatever, $6. You come back with a receipt and the $4 and you hand it to them and they write down that this is for postage stamps and it's called petty cash. And by definition, it's petty. It's these are usually small amounts. They're, you know, $6, it probably costs more than $6 to get a purchase order cut. So you're better off just, you know, running through petty cash. But as owners, we probably don't audit petty cash. You know, by definition, it's petty. So what do we actually look at? We look at risk. So, you know, the risk of petty cash is fairly low. Okay, so two broad areas of risk. Business risk. Business risk, the risk that the business will go bankrupt. So this is your client, by the way. Well, that's another thing I got to talk about. So business risk is a risk that your client will go bankrupt. So if we're auditing IBM's financial statements, the business risk is that IBM will go bankrupt. IBM's our client. Could be any client, but basically business risk is the risk that the business will go bankrupt. Whatever business you're auditing will go bankrupt. Information risk. Information risk is a risk that an undetected material misstatement. So information risk is a risk that an undetected material misstatement will appear on the financial statements. Let me change how I show these. So undetected material misstatement will appear on the financial statements. So business risk is the risk of being in business is that they could go bankrupt. Information risk is a risk that a material misstatement will appear on the financial statements. Which type of risk are the auditors mostly concerned with? Did I write that? Auditors are mostly concerned with which type of risk?
Risk of
Maybe
loss?
information risk.
Yep.
Ew.
And here's why. You know, we do a report on that the financial statements are, you know, reasonable assurance whether they are free of material misstatement. No, and here's where something that kind of differs from what the public perception might be. We don't say it's a good investment. When we do our audit report on, say, IBM, we don't say, oh, IBM is a good investment, you ought to invest your money in IBM. We never say that. You can look at the financial statements, though, and make your own decision, make your own determination of whether IBM is going to go bankrupt or not. But our focus is only on the accuracy or reasonable assurance about, the financial, that these can be relied upon. I shouldn't say accuracy. That they're free of material misstatement. They're fairly presented. That's all we're concerned with. And what people do with those financial statements, they say, well, IBM's going bankrupt or IBM is doing well, I should invest in them or whatever. That's completely up to whoever uses those financial statements. But we do not put a stamp of approval saying this is a good investment. And by the way, even if the financial statements are 100% correct and maybe IBM is very profitable, it might still not be a good investment. It depends on how high the stock price is. If the stock price is astronomically high, and it might be a bad investment, even though they're doing well, they have, they're and so on and so forth. So we never actually say this is a good investment, you should invest your money here. Now, people read a clean audit report and they may come to the conclusion, if they're not sure what they're looking at, that it's a good investment. That's not what we do. We simply say the financial statements, we're looking to see if they are free of material misstatement. Now, if a company's going bankrupt, the financial statements are going to look bad, but generally that's not our, at least not 100% our, what we're reporting on. We're going to find out later that actually we do tack a paragraph on if we think the company's going bankrupt. But generally speaking, the financial statements, we don't say whether they're a good investment or a bad investment or anything like it. So we're basically our big thing is the information. Okay. Corporate governance, I should say. Board of directors. Board of directors, you probably know all of this. Board of directors is a group that oversees the management of the corporation. The members of the board of directors may include inside directors and outside directors. Inside directors are actually working inside the company. Okay, let me clean this up a little bit. Okay, so when you have a corporation, board of directors is a group that oversees the members of the board may include inside directors and outside directors. Inside directors are employees of the company. So you could have somebody who's in upper management of the company also be on the board of directors. Okay, so inside directors are people that are also working inside the company, whereas outside directors are not. Now, notice that the inside directors are part of management usually, and they should already know what's going on with the financial statements. So the inside directors are not the only people that you need to report to about the financial, in the audit report. It's not directed at those people. They should already know it. They very well might be the people that actually made the financial statements. So we're looking at more of the outside people. So audit committee. If it's publicly traded, they're required to have an audit committee. Let me. So if they're a publicly traded company, they're required to have an audit committee. If they're not publicly traded, they may have one, but publicly traded companies are required to have one. The audit committee, which is a part of the board of directors, the audit committee is part of the board of directors. They should only have outside directors on the audit committee. And basically, a lot of times, if it's a public traded company, auditors will be dealing with the audit committee rather than people on the board of management or anything like that. The audit committee will decide how much, negotiate how much they get paid. They'll decide with the dates and all that kind of stuff. A lot of that all goes to the audit committee. So an audit committee is part of the board of directors. It's like a subgroup, a subset of the board of directors. And they only have outside directors. And again, this is overseeing. By the way, they call this whole thing, this whole board of directors, audit committee, all that stuff you'll commonly see that just, don't do that. I did it wrong. Corporate governance. So whenever you see the term corporate governance, this is what they're talking about. Question on that? Okay. Types of audits. Let's take the first one when we're talking about the most, financial audits. These are independent audits. And CPA firm. This is why you pass the CPA exam. It gives you the ability to do these types of audits. Oh, wackily. So these are sometimes called examinations. So if you see the term examination, they're talking about a financial audit. Okay, so we have financial audits. Compliance audits. A compliance audit is, do you comply with the rules, whatever they are? An example of that would be an IRS audit. There's other ones too, but the IRS, if the IRS audits you, they're saying they're checking to see that you comply with the IRS rules. So a compliance audit is, are they complying with the rules? There's other ones too. For instance, at the university here, we get grants. You get state grants or whatever. And a lot of times they'll say, okay, you can only use this grant to purchase, say a hardware, computer hardware. It's the only thing you can use this grant for. Here's a $10,000 grant, but you can only use it for computer hardware. So you take the grant, you spend the money, and they may very well have someone come and audit and say, okay, let's see, you're supposed to only spend this on computer stuff. Let's see what computer stuff that you actually bought, and it'll show, it's a compliance audit. Are they complying with the grant? Same thing. So you have these set of rules, whatever the rules are, and you see that if they comply with it, and that's a compliance audit. Sometimes they're tied with financial statements, sometimes they're not. But compliance audits are the most common one is the IRS. When people get audited by the IRS, it's not necessarily a bad thing. I had a friend that got audited by the IRS that actually they wrote him a check for $700 because he overpaid his taxes. They go through and see if he did it right, and they say, no, you didn't follow the rules right. Here's $700. He's a CPA, so anyway. Okay, so a compliance audit. Operational audits. I'm going to break this one up a little bit. Operational audits. These are future oriented. They generally look at the effectiveness, or efficiency of an operation. Okay, so operational audits, they're future oriented. So it is to make improvements. And they look on whether they are effective or efficient. So operational audits are usually the most involved audits. Operational audits are the most involved audits. By the way, if you want to know, my background is I was an internal auditor. I worked for Navistar, which makes trucks, and US Steel, which makes steel. And but I was inside the company, but we would do operational audits all the time. You would go to an you go to an operation, and they say, okay, well, we want to know if we're doing what we're supposed to be doing, but also are we doing it efficiently? And so that's what we would do. And these are oftentimes they're really involved audits. They're they're way more than, say, a financial audit. You have to look at all kinds of things in operation. But anyway, but operational audits are for effectiveness. Are they getting the job done? But also efficiency. How well are they doing it? When you're doing a financial audit, excuse me, you're generally not looking to see that they're efficient. If you're looking at some process that maybe one person could do and they have 3 people doing it, generally that's not your problem. That's not what you're looking at. Is it effective? Are the financial statements being, free of material mistake? So we only look at the effectiveness basically if you're doing financial audit, but the efficiency part is part that you do for the operational auditing and making improvements. And quite honestly, those are also ones that are a little more confrontational, I would say, because you're actually looking at the way people do things. financial audits, they occur every year. Everybody knows about them, and generally not that confrontational. And, what do you need? Okay, here you go. But operational audits can be a little bit more tricky. Okay, let's see here. The Happy Bakery wants, something's on my screen. I can't get it up. Okay, there we go. The Happy Bakery wants to improve production. Which of the following audits would be appropriate? Oh, I didn't. I left one out. I left a kind of crazy one out. I'm sorry. One more. Integrated audit. I say 2 or more audits combined. And one more thing about integrated audits, and this kind of hits home with us. For publicly traded companies, they may have a financial audit and internal control audit combined. Publicly traded companies, they'll have both those done at the same time. That's an integrated audit. It really isn't. I don't know why they call it a type of audit. It's really just two types of audits combined together, I guess, is a way to put it. Okay, so combining any 2 types of any 2 audits together is going to be an integrated audit. Okay. Back to this. Happy Bakery wants to improve production. Which of the following audits would be appropriate for this task? I put you guys to sleep, didn't I? Happy Bakery wants to improve production. What do we do?
Operational one?
Yep. Very good. The city of Chicago needs assurance that grant money for homeless residents is being spent properly. Which of the following audits would be appropriate for this task?
Compliance.
Yep, there's a compliance one. Do they comply with the grant? Are they complying with the grant? I might skip some of this stuff. Let me see here. I'm going to skip down to let's get on to the CPA exam. I want to talk about this a little bit. Okay, CPA exam. The American Institute of Certified Public Accountants So the American Institute of Certified Public Accountants is called the AICPA by virtually everybody. Creates a CPA exam every year. The ACCPA is just a club for CPAs. Okay, so the ACCPA creates a CPA exam every year. The ACCPA is just a club for CPAs. All right, so you pass CPA exam, you get your license, you'll get a letter in the mail, or maybe probably email now. Mine came in the mail. In the year of our father. But anyway, and they'll offer you to have you join their club. Hey, find out, hey, we hear you're a CPA. Do you want to join our CPA club? It is just a club. It's not a government agency. They don't have any official powers at all. It's just a club. So you join the club. Okay, now, so getting you the CPA exam. So here's this club, like the Boy Scouts or Girl Scouts or whatever. They make the CPA exam. Well, who cares? This is some club that doesn't have any power. Why do we care? Here's why we care. Every single state uses the AICPA's CPA exam to license CPAs. So when you take the CPA exam in the state of Illinois, the state of Illinois did not make that exam. The AICPA did. And the state of Illinois said, oh, by the way, here's this club. And if you want to be licensed in our state, you got to take this club's exam. So the AICPA is just a club, but they make a CPA exam. That CPA exam is universally accepted by every state. And the state of Illinois could wake up tomorrow and say, we're going to make our own CPA exam. Nothing wrong with that, but they're probably not going to do that. I can't imagine them doing that, but they could. So the real power from the AICPA is not direct. It isn't that the AICPA can't do anything to you, just like the Boy Scouts can't. I guess individually Boy Scouts could do something bad to you, but the club itself, I'll put it this way: the Boy Scouts cannot take your driver's license away. Same with the AICPA; it's just a club. But because the states all use their exam, that's why there's some power in that. And we'll talk more about it. There's other stuff that they have too, but so CPA exam is made by state boards of accountancy. Every state uses the AICPA's CPA exam okay. So while they have no power of their own, it's not on the same page. So every state uses the CPA exam to license CPAs. So when you take the CPA exam, you're actually using an exam by this club. This club made the CPA exam, and you have to pass that club exam to become licensed. Every state uses it. Question on that? Okay. I think I'm gonna jump right down to CPA firms, and we'll come back next time. And finish up some of this other stuff. I just want to kind of try to keep the CPA stuff together. And I think I'm gonna jump down here to what is this, letter Q? Okay. So I'm just going to go over, this will be the last thing we cover, are these CPA firm positions. Okay, so, and I'm going to talk a little bit about CPA firms just in general. How do you get into a CPA firm? CPA firms generally they're very good to get into them if you can. They generally, you get an internship a year before you graduate. And so if you're going to graduate when you're, in a bachelor's degree, your junior year, you get an internship with them. If you're going your master's degree about a year before you graduate, you get an internship with them. That internship is where the job offers come from usually. So the BN and something like 95% of people that do internships get job offers. So oftentimes getting the internship is the hard part a lot of times. Now you get there and you got to do hard work, but the internship is kind of your foot in the door. So if you're looking to get into a CPA firm, some people can get into a CPA firm not going through the internship programs, but a lot of times they do. And these CPA firms are kind of stuck in their ways in that, they want to do the internship first, get to know you, blah, 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 and then bring you on board. It's also very unusual, though, to do an internship at a CPA firm and then go to a different CPA firm. For whatever reason, they don't like that. If you were an internship, they want you to know their way, and that's the only thing they want you to know is their way. They don't want it. So if you say, well, I'm going to do an internship with this group, and then I want to try to get a job at this other group. A lot of times it doesn't work that way. And two, part of it is they'll say, okay, we had this internship with the CPA firm. Why aren't you working there? Did they not want you there or whatever? So be careful with you generally do your research based on your internship, where you want to get the internship, because the internship is usually going to be where the final job is. It's not like a regular internship where you can work at 5 different places and then you can tell your employer, look, I worked at these 5 different internships. And they go, oh, that's great. CPA firms are a little bit different. The internship is your foot in the door, and that's the only door basically you go through, is whatever CPA firm you picked. So it's a little bit different than most, internships and most business things. Okay, so where do they start you out? Staff assistant, sometimes called an associate. Uh, 0 to 2 years experience. So this is the starting. This position does not require a CPA license. CPA firms usually pay pretty well. My guess is they're probably nowadays are probably somewhere up around 70,000. Larger firms, anyways. Start out with. Okay, so this is a staff assistant associate, up to 2 years. The senior position, okay. They'll run audits. These are sometimes called the in-charge auditors. This position requires a CPA license. Okay, so the senior auditor, sometimes called the in-charge auditor. They will run audits. The position requires a CPA license. The CPA exam not focused. There are two S's in it. CPA is focused on senior auditors. So this is the focus of the CPA exam. They are focusing on those people who are the in-charge auditors for these are people that are actually doing the audits and running the audits. They'll have staff assistants working underneath them, and this is what the CPA exam is focused on. Yeah, the staff is when you first go in there is what do you do in this situation? You say, well, I asked my senior, I asked the senior auditor what to do. So when you first start out, they don't require that. Now, if you look at this, though, one thing is clear though: when you are an associate or you're first starting out, you don't have to have a CPA exam, CPA license. When you move up to senior, you do. So you cannot make that step unless you pass the CPA exam. So even though it's not required when you first start out, it's assumed that if you're going to try to move up, that you're going to sit for and take and pass that CPA exam to move up. So passing the CPA exam becomes a requirement if you're going to stay in auditing in a CPA firm. So start in, you come in as the associate, move up to the senior or the in-charge. It requires that you have a CPA license. Any questions on that? Okay, so to move up, you need to have that license. Senior auditors, they probably make maybe 80,000 to maybe 120,000 in the larger firms. I mean, think about it. CPA firms are very lucrative. So you could, within 2 or 3 years, you could be making over 100,000. Okay, managers. Managers will several audits and senior auditors. So managers are the ones that will be overseeing the audits, employee-wise, they'll be overseeing what the seniors are doing. So they may have 5 seniors that they're overseeing. So if you move up to the manager position, you very well may have 3, 4, 5, even up to 8 or 9 seniors working underneath you on different audits. So you're kind of balancing those things, and generally you're going to be getting hit with big questions from those audits. Oh, they had this happen. They merged with this company. What do we do? You're going to probably get the more, not the run-of-the-mill stuff. Everything's okay. You're probably going to get the big questions more if you're a manager and to know what to do with them. So after you've been working as a senior, so for around 5 years or so, they'll move you up into this manager position where you'll actually be overseeing other seniors. And these can probably somewhere in the $100,000 to $200,000 range, maybe even more than that. Okay, partners. Partners have a responsibility to obtain clients. So basically, if you're a partner, you have to be able to bring in clients. And that's how you make partner, by bringing in clients. Partners probably. Yeah, it's almost, let me see. It could be more than that, though, depending on their clients and how many and all that kind of stuff. But your whole job as a partner is to get clients in. It's sort of like a high dollar. It's sort of like a in a way, it's sort of like a very high end sales position. You're trying to get clients to come into their place, and that's how you make partner. And basically, if you're in a law firm or a CPA firm or whatever, how do you make partner? You make partner by bringing in clients, and it's a necessary part of the business. You have to have clients, or you're not going to be doing audits. So bringing in clients is a very important thing. I talked to a new partner one time at my sister's house. They live on. My sister's very successful. They live on this golf course thing. But anyway, one of the neighbors was a new partner, and he had to pay out something like $100,000 for memberships into 2 golf clubs. A lot of this done on the golf courses. So, they were making a lot of money. Money was coming in, but a whole bunch was going out because they had these memberships they had to buy. But anyway, they're very high-end sales jobs. They're not. You don't, even if you were a terrible auditor, you could be a great partner because you can bring stuff in, and vice versa. You could be a fantastic auditor, but if you can't bring clients in, you're not going to make partner. And that's just the way it is. Now, you'll notice something about the way it's written up here. You'll notice that, for instance, these staff accountants, it doesn't say 0 to 20 years, it says 0 to 2 years. And when you go to the seniors, it doesn't say 2 to 50 years, it says 2 to 5 years. This is same thing with managers. So you say, okay, well, what happens? Well, if they can't move you up, they move you out. So if you come in as an associate, and they can't make you into a senior, you're going to leave. Same thing if you're a senior. If you're a senior, they don't think they can make you into a manager, you're going to be leaving. Manager, if they can't make you into a partner, you're going to be leaving. So it's this up or out kind of thing. Something like 1 in 100 people end up becoming partners. It's a very difficult thing to go up through, to fight your way up through that that group. So, but it's either up or out, and there's a real reason for that. It sounds very cold and mean, but the reason is you have to have partners for the partnership to survive. You have to have partners. They bring in the clients. If you let people just sit at the lower levels and not be able to be moved up, eventually all those access points to getting, the 1 in 100 partners are going to be plugged up with people who are probably very competent what they're doing, but for whatever reason they can't be moved up. It's going to be the death of the CPA firm, because when partners don't live forever, and they retire and everything else. So if they don't, if you don't have other people who can step up into those roles, it's just going to disappear. So it's up or out. Now, generally speaking, you say, well, that sounds just terrible. That's horrible. You know, you're going to kick somebody out. They've been there for 2 years. You know, during busy season, they work 70 hours a week. And you're just going to kick. Generally what happens is they try to get those people positions in with the clients. So for instance, let's say I'm auditing IBM or my firm is whatever. And for whatever reason, they don't think they can move me up to be a senior. Okay. Maybe I didn't pass the CPA exam or whatever it is. They can't move me up into the senior. What they do is they try to get you a job with the client. So they call up IBM and say, yeah, there's this guy, you know, Mark, you know, we just don't have a position for him at the senior level. You guys want to talk to him? Yeah, sure. CPA firms have a credibility in the accounting field that is very high. They're known as being, you know, really a kind of a boot camp for accounting. And it isn't uncommon for someone to come out with 2 years of experience to get a job that would take somebody else who didn't go through a CPA firm 6 or 7 years. You know, they might put you would be a supervisor, you know, when you're 23, whereas most of the supervisors are 30. You know, it's not uncommon to have those kind of bump ups. So the CPA firms, having a CPA firm experience is very sought after. And a lot of times they'll get you jobs within the client. And part of the reason, you know, is they want to see you succeed, but also part of the reason is when you start working for IBM, who's going to be the auditor? Well, the audit firm that you worked at, that's who's going to be the auditor. So they have kind of inside the company, their own people. So they'll often try to get you jobs within the client. So again, is you have a senior, you don't think you can make them into a manager? Talk to the client, IBM, we got this, you know, we got the senior. Oh yeah, we know, you know, we know Sarah. Okay, you know, and Sarah might come in at a very high level as a senior accountant or whatever, analyst or whatever it is, because again, that CPA firm experience is very sought after by new companies. It's considered a real stamp of approval. Same thing with managers. You know, that companies will usually love to have those people come aboard. So even though it sounds very cold, a lot of times they actually do try to get positions for those people that are not being moved up. They're being moved out. But anyway, so that's kind of like what it is in a CPA firm. And generally CPA firms, you know, they say about 1 in 100 make partner at the larger CPA firms. It's a tough road to handle, and it is a lot of work. I'm not going to, you know, tell you that during the busy season, you know, you're going to be working like crazy. They'll tell you, okay, well, you know, on Sunday, you know, you have to come in until 9 on Sunday. You know, we'll work 9 to 7 on Sunday. You know, all the other days you're gonna be there 7 o'clock till, you know, whatever. So it's a lot of work during the busy season, but again, it's very lucrative, first of all, and also even if you don't move up, a lot of times when you get moved out, you know, you get much better working conditions. You know, you're not going to be there 70 hours a week. You're going to be there 45 or 50 maybe, or, you know, even less. So anyway, going through a CPA firm is actually a very good thing to do. All right, I think we're going to stop there. And next class, you don't have anything to turn in. I do want to talk about some of these other things, but and we also have to go through the second part of the handout. Okay, so we'll stop here. Actually, I'm going to go up here and say stop here, because I think I do want to cover these. So nothing to turn in this week. Let me save that. Oh, you guys can't see what I'm doing. So we'll come back to the types of auditors, the ICPA, and a few other things here, and then we'll go into chapter 2. Okay, so nothing to turn in this week. Has anyone tried to use the? Sorry, has anyone tried to use the ebook link?
Not me.
Okay.
I tried it, but it was giving me an error page.
Oh, really? It doesn't show this, apparently.
It does, but then when I put in my email address, it turns up an error, so maybe I'm doing something wrong.
No. Let me let me look into it. Yeah, we had a real problem with the textbook. It's kind of strange because we have this. It has part to do with the bundle, the Laker bundle thing. I think because we have Barnes and Noble, or they're the ones that take care of all of our bookstore stuff, but the Laker bundle is specific to us. I think there's only one other college in the country that does this, but anyway, and so it's kind of strange that it's not just Barnes and Noble. It also has to go through us to see which courses are put in there, but it should be in the bundle. So anyway, don't worry about the ebook. I'll get that straightened out, and yeah, so it should be included in the Laker bundle. But I'll remember it. Any other questions? Okay. Well, I will see you guys next week. You don't need to turn anything in this week. Next week we'll finish it up and we'll turn it in, and we might get to the multiple choice questions, and I may even send out the exam next week. Everything I send out, you basically have a week going to the next week Friday. So, for instance, anything we've done today, if we turned in anything today, it would actually be due. If we finished it today, it would be due. Not this Friday, but the following Friday. Give you enough time to look at it and get it the way you want it to submit it. And if you ever do submit anything wrong, another thing I should mention, if you ever do submit anything wrong, incorrect, or incomplete, or whatever, you can always resubmit. So maybe I submit my file, I realize I submitted the blank one. You don't have to contact me or anything else. Just submit it again. And it'll show on my screen, it'll say there's 2 submittals. And, usually I just go to the second one or the third one, or I go to the last one, whatever it is. That's the one I usually look at first and see if because that's usually the one that people want me to see. So don't worry about if you submit the wrong thing or whatever, that, it's the end of it. You can submit as many as you want. Any questions?
No.
Okay, I'll see you guys next week, and I will hopefully by tomorrow I'll get the ebook thing. I'll send you guys a message though when the ebook thing is fixed out, and it is part of the Laker bundle.
Okay. See ya. Thank you.
Thanks, guys. And this will be recorded and put up soon.